7 fundamentals for the week. 2 rate cuts, non-farm payrolls to jolt markets in a packed week. May's end-of-month flows were wild, but directionless, and the first week of June is packed of top-tier events that may shape trends for weeks. Forward-looking surveys, guidance about the next moves from central banks, and all-important U.S. job figures are all on the docket. If you're new to our channel, then subscribe and stay connected with us by like, comment, and share this video. ISM Manufacturing PMI may show a retreat in inflation. Monday. Despite massive manufacturing and construction spending, the industrial sector seems cautious. The Institute for Supply Management's Manufacturing Purchasing Managers Index reached 49.2 in April, signaling a mild contraction. Economists expect a similar outcome now, but a key component could steal the show. JOLT to jolt markets, lower outcome on the cards. Tuesday, this demand report in the labor market is for April, contrary to the non-farm payrolls figures, which are for May. Nevertheless, investors have learned not to fade this publication, as the Fed watches it closely. When JOLT showed 8.488 million annualized openings in March, markets took it as a sign the labor market was cooling. Another drop to 8.34 million is on the cards. ADP jobs data could trigger the opportunity to go contrarian. Wednesday, roughly every 6th U.S. payslip is processed by automatic data processing, giving the software provider insights into the labor market. Its private sector labor data serve as a leading indicator of the official non-farm payrolls data, which is due out on Friday. That makes it a market mover. However, the correlation between ADP and official figures is spotty. Moreover, the top-tier ISM Services PMI report is out less than 2 hours afterwards, giving investors something else to focus on. Bank of Canada to cut rates, probably. Wednesday, between 2 key U.S. events, its northern neighbor takes the spotlight. The Bank of Canada is expected to cut its interest rates for the first time since March 2020, changing the overnight rate to 4.75% from 5%, which has been in place since July 2023. ISM Services PMI may cool markets and shape NFP expectations. Wednesday, the forward-looking indicator for America's largest sector showed contraction, while its inflation component advanced. Headline ISM Services PMI is set to rise to 50.5 from 49.4, crossing above the 50-point threshold and suggesting growth in the sector. While improved prospects would be good news for the economy, it would hurt stocks and push back expectations of rate cuts. A CB to cut now, push back against more moves. Thursday, the rate decision will be at 12:15 GMT, and the press conference will be at 14:45 GMT. Are they declaring victory against inflation? That is how markets will see the first rate cut from the European Central Bank. Both headline and underlying inflation are below 3%, close to the bank's 2% target. That justifies slashing the main refinancing operations interest rate to 4.25% from 4.50%. Non-farm payrolls may rock markets on a second consecutive miss. Friday, investors have been laser-focused on inflation in the past few years as it has risen and as the Fed put all its efforts into crushing rising prices. However, there are initial signs that unemployment is creeping up and full employment is the bank's second mandate. Headline non-farm payrolls missed estimates in April, coming out at 175,000 versus 243,000 expected. Markets will get jittery around every news release in this busy week. I recommend trading with lower leverage and more care than usual. For more in-depth analysis and exclusive content, visit our website at financialmarkets.online. Don't forget to like this video, subscribe to our channel, and hit the notification bell to stay updated on the latest financial trends.